Hello and welcome to another edition of Analyst Insights. We are talking about our markets, in particular our local capital markets. So as usual today I'm joined by my colleague Rufaro. Welcome to Analyst Insights.
Thank you for having me, Ranga.
Before we get to the issues we want to discuss, just to share with you some major statistics on our markets, where in the last 2 weeks we saw the market sort of turning around a little bit, and actually last week in the week under review we are seeing the major indices actually showing positive movements, although it's happening on the back of low activity. It looks like the sell-off that we had seen in the last month or so after the announcement of the policy around the Zim dollar is actually slowing down. So there's a bit of buying taking place. Even up to today, we're seeing some bids on major stocks. And in terms of the weekly traded value, we still continue to see paltry trades across the two bourses that we have, the Zimbabwe Stock Exchange and the Victoria Falls Exchange. As you'd expect, the most traded stock on the Zimbabwe Stock Exchange remains Delta and Econet, but there was also a big trade about totaling 1.8 billion Zim dollars for BAT. And there is a steady increase in activity on the Victoria Falls Exchange, where Simbisa, Insco and Axia were leading the trades there for the week under review. As you can see from your screens there, the power market rate and auction rate, they continue to go down as liquidity on the Zim dollar side continues to be elusive. But I think what's worth noting is the fact that the Zim dollar actually on the power market is sort of stabilized around 6,000 Zim dollars against the USD. And there are indications that if liquidity starts coming onto the markets, we might see actually the rate starting to run again. So that impact of Zim dollar liquidity issues also are affecting the stock markets, as I've already alluded to. So I think, Faro, it's a good starting point to our discussion. That what are you seeing? Are you seeing a market turning or the slowdown? What's actually is the reason behind the trading that we are seeing on the market, and what has been your experience talking to the clients?
So I think from the Zim dollar side, the slowdown in trading and the lower volumes is simply a function of the tight liquidity of the Zim dollar. There's just not a lot of them circulating. But if you look at the valuations of the stocks on the VFX, that hasn't moved materially one way or the other. The stock market, you have actually seen a significant revaluation downwards. But again, I think that's got more to do with lack of demand than actual perception. I don't think the market believes the shares are cheaper. There just isn't Zim dollars chasing them. So it's a classic supply demand dynamic driving the prices lower, and I think it presents a fantastic buying opportunity for those who have Zim dollar liquidity. I think this is transient. We've seen this happen historically, where the currency has run and then the government has taken action to constrain Zim dollar liquidity. Minus Zim dollar liquidity, Zim dollar prices come off, and then you get bargains for some time. So what's unknown at this stage is how long this is going to last. Are we seeing this for a few weeks, for a few months, before we return to default settings?
So it's interesting that you are raising that point, because also right now, in terms of the trading updates that we are seeing, this business is actually doing well. So this week we saw the trading update from Delta, where they were actually saying volume or revenue actually in USD terms grew by 10% for the quarter that they are reporting. And they are seeing about 80% of their collections right now, they are USDs. And the company also went on to say they are able to cover all their foreign currency needs from their local sales. So what does it say about this whole discussion around ZIM dollar resuscitation and maybe the members that maybe post-election might actually see a policy that will then, where the ZIM dollar is going to be restored as the sole currency and US dollars being discontinued as legal tender or as a currency?
So look, I think if you look at the policy action that was taken to constrain the movement on the power market, and you you take the view that it was intended to slow down the movement of, or the devaluation of the ZIM dollar on the power market to make it stable, and in addition to that, the intention was to make the ZIM dollar more relevant, by, for example, making payments to the revenue authority only in ZIM dollars. If you look at that particular aspiration in terms of outcomes, that the ZIM dollar becomes more relevant by slowing down its devaluation. One of the ironic outcomes of the policy action that's tightened ZIM dollar liquidity is that it's made the ZIM dollar less relevant, because people have less access to it. They are transacting more in US dollars than in ZIM dollars. So, so what you're actually seeing on the ground is the ZIM dollar become less relevant. And this is what is manifesting in the delta numbers you've just spoken to, that they've seen an increase in their US dollar revenues at the expense of their ZIM dollar revenues, because the customer on any given day is more likely to transact in US dollars than in ZIM dollars, because the US dollars are much more accessible to the customer than the ZIM dollar. So ironically, by making the ZIM dollar scarce, the treasury has actually made the ZIM dollar less relevant. People are finding that they can go through they can go through their day-to-day lives without using ZIM dollars for anything.
Okay.
As long as they have US dollars in their pocket, they can buy bread, they can commute, they can do all the things that they need to get by. So if anything, what this tightening in ZIM dollar liquidity has done is it has hastened the pace of the dollarization. So whatever the ratio of our economy or ZIM dollar versus US dollar, I think the ZIM dollar portion has shrunk on the back of this policy action, and the US dollar portion has grown. So that trend is actually accelerated.
So is it a bad thing? Is it a good thing? Because I'm looking here at the trading update where the company is saying they've got sufficient foreign currency. So that means they are able to pay for their critical inputs, imported raw materials, without having to go to the banks or approaching the central bank for currency. So is it a bad thing if you've got a situation where companies, organizations are able to meet their import needs from their own currency that they're generating, albeit locally and not from export proceeds?
I think it's a good thing. I think anything that removes pressure from the official auction and wholesale markets is good for the country. Unfortunately, what's missing from this is that the exporters are not benefiting to the extent that their retentions are still at the official rate. They're not. So while importers are now free to transact openly and price openly in US dollars, exporters still are subject to retentions, and they still have to interface with the ZIM dollar with ZIM dollars at a rate that is not a free market rate. So even now, if you look at the official rate at about 4.9, it's the discount to the power market, which is trading at closer to 6,000 at 20%, is still quite material, and it's a significant prejudice to the export sector. But for those who have an import component and they're able to price in US dollars and receive US dollars, it means that they can import at will without any challenges.
So another issue that we need to discuss is around inflation. So there is an African Development Bank report which was suggesting that they're expecting ZIM inflation to reduce at a big scale. So actually they are projecting double-digit numbers in 2024, obviously as part of their African report on inflation in the continent. So one of the reasons that I cited for that projected decreasing inflation is because of the tight monetary policy regime which the authorities have pursued. What do you make of that projection? Do you share the similar optimism and also the reason they are citing, do you think is sustainable into 2024?
So I question the relevance of such analysis. If you're talking about ZIM dollar inflation in 2024, the question that comes to my mind is what portion of the Zimbabwean economy is going to be trading in ZIM dollars at all in 2024? Already, a few months ago, the official numbers were that it's only 24%. And we know that with this policy action that is significantly tightened ZIM dollar liquidity, that portion of the economy that's trading in ZIM dollars has shrunk. And going forward, we're only in August, it's continuing to shrink. So by the time we get to 2024, what percentage of the ZIM dollar of the economy is going to be trading in ZIM dollars? And what relevance if that percentage is less than 10% or less than 5%? To what extent is the inflation happening in that small part of the economy relevant? If it's double digit, triple digit, or single digit, it's hardly affecting anyone at that point. So I don't think it's relevant to talk about ZIM dollar inflation in 2024. I think it's the ZIM dollar is on its last legs, and it will be what's happening with ZIM dollars matters today, maybe next month, maybe for the next few months. But going into 2024, it's difficult to imagine the ZIM dollar being quite as relevant as it is today.
So the report doesn't specifically say ZIM dollar, but they're saying ZIM inflation. So I guess in this case they are talking about the blended inflation. So if we are, if they are projecting a situation where that number is going to continue to decline, isn't it in line with what you were just saying, that over time you're expecting the ZIM dollar transactions to be fewer and fewer, to a point that whatever they're measuring as blended inflation, maybe 6 months, 12 months from now, it will be purely US dollar inflation. So if it is US dollar inflation, this kind of projection that they have of 36% in 2024, is it a good number?
No, of course it doesn't make any sense. Today, US dollar inflation in the US is 3%.
Okay.
And it's on a downward trajectory. I mean, this time last year, US dollar inflation was closer to 9%.
Okay.
So, and the Fed just recently tightened. I think they increased interest rates by 25 basis points at their last meeting. And all indications are that they're not going to be easing anytime soon.
Okay.
So because we don't control US dollar monetary policy at all, we are just price takers. I think it's fair to say that US dollar inflation in Zimbabwe will closely track US dollar inflation in the US. So if we are saying it's at 3% today per annum, and it's the outlook is that it's on a downward trajectory, 36% doesn't make any sense at all. 36% only makes sense in a world where there is significant ZIM dollar transactions in the economy, and ZIM dollar inflation is quite high, coming up with a blended inflation that is double digit. But my sense is that next year, the portion of the ZIM dollar in the economy will be so small that the actual inflation that will matter is US dollar inflation. And that's at 3% today and trending downwards. So, I don't know how they've arrived at such a high number.
So one of the worst hit subsectors as a result of the policies, obviously the capital markets. where we play in, and reflecting that, you are seeing that actually the value of listed businesses on the stock market, as measured by their market capitalization, continues to go down, and that's actually a reflection of the value destruction that is taking place. And what does it say in terms of the whole narrative about attracting investment when policy measures have got a direct impact to business valuations that are not at all attached to the actual operations of the businesses?
So I think, so if you look at the valuations of the ZSE today, I think that, when the volumes, when liquidity comes off significantly, that has a severe negative impact on price discovery. So what you'll find is, in a highly liquid market, the share price on any given day is not a good reflection of what fair value of that stock is. It's just a reflection of the dynamics between people who desperately need some dollars and the few that have them. So I think I would not read much into the valuations that we are seeing on the ZSE today at these kind of liquidity levels. I think when you have much more volume change hands, the share prices are a better reflection of fair value. I think the share prices today just speak to the very tight liquidity of Zim dollars, and I wouldn't read too much into those valuations.
So to our viewers, so these are the numbers that we are talking about on your screen, just showing you the market capitalization for the big companies that are listed on our two exchanges, where you see the likes of Delta has got a valuation of a market cap of 412 million USDs, and InScore a market cap of 186 million US dollars. So that's the extent of value destruction that we are seeing on the market as a result of the policy framework that we have. Thanks so much for watching this show. Remember to like our page and subscribe to our YouTube channels. Let's have your comments and your suggestions in terms of where you want this show to go. Thanks for watching. Otherwise, have a good day and see you next time.
Yay!